Did anybody know this, that 80% of home price appreciation is due to the fall in interest rates over the last 35 years? We can prove it mathematically. Now I'm going to hedge that with an up to 80%, right? There's other factors. What are the other factors out there? And I want to hear from you guys. What are the other factors that impact price appreciation other than mortgage interest rates?
Location.
Yep, location.
Inventory.
Yep, supply. Yep. Would it
Jobs.
Jobs, yep. Would it be helpful to like look at the data on what really drives housing?
Sure.
Okay, because I think this is important. First thing first, there's this person who's in charge of the FHFA who basically complains every single day that we need to lower interest rates and fire Powell. Well, the reason why Powell's like the adult in the room being like, guys, slow down. There's a reason why we're independent, because each president, regardless of your political affiliations, everybody's going to try to drive the economy to continue to stay in power. That's just how it is. So they would manipulate the Fed to continuously print money to drive the markets higher and higher, right? That's why they're independent. That's why they were set up to be independent. Everybody understands this. It's like a matter of fact thing. That's not stopping this administration from trying to put somebody in that they think should raise lower rates. Powell's been hesitant to lower rates because of the tariff impacts that he's doing with the trade wars. We don't know how that will impact, but that's why Powell said that he has been slow to do it, because he wants to see that impact before he lowers rates. Here's the thing about rates. The Federal Reserve, you need to understand this, they control short-term overnight borrowing rates. They do not control 30-year mortgage rates. They control what the banks borrow overnight from the Fed and then pay them a specific amount of return. If the Fed reduces rates, then it basically allows the opportunity that they can lend more money, for a lower amount. So it adds basically a stimulus effect to the economy. Now, in certain circumstances, you need to understand this. If the Fed lowers rates and then the bond vigilantes, the people who buy bonds, think that inflation will go up, what happens to long-term rates? They go up. So there's a possibility that they're going to have the opposite effect on what they're intended. They want to get mortgage rates down, right? Everybody wants mortgage rates down so housing doesn't collapse. But if they lower short-term rates and they think inflation is going to be higher in the future, then it could actually have the opposite effect where we see a very steepening yield curve. So it's confusing to me. So this guy Pulte, right, Pulte Holmes, he's the godson of the original Pulte who started the company. So this is a huge risk. He doesn't really seem to understand basic economics. And I'm kind of terrified at what's happening in the conversations that are going up and down here. If like we were to reduce rates to 1%, we would be in a hyperinflationary environment. And that changes everything for housing. And that's what they're calling for. But this basically complaining every single day that rates are too high. Of course, he's going to say that his grandfather was the owner of Pulte Homes. It's in his best interest to cut rates to bail his own new construction, projects out. But here's the reality of it. This is why prices have come so high. 80%. This is an article by John Wake. He's an analyst. I wouldn't say that what he says is 100% true, but it's something you want to look at. He came out with an article the other day saying 80% of house price appreciation since 1990 was due to falling mortgage interest rates. 80%. Let's look at why that is. Here's the Case-Shiller index. I've actually met Shiller. He's an awesome guy at Yale who came up with the Shiller index, which basically tracks MSAs based on price growth. This is what it looks like over the last 35 years, just complete growth. As interest rates came down for 35 years. And this is why people say real estate always goes up. It always goes up when interest rates are falling, of course, right? Lower financing costs, higher price. Because everything in our economy now is about what? It's about payment. Can they make the payment affordable? And they can draw things out, right? Instead of doing a 30-year mortgage, we could now do a 40 or 50-year mortgage if we wanted to and continue to extend the housing run. Now, whether that's sustainable or not is up to your own opinion. I'm just sharing with you the data that I'm collecting. And you don't have to agree with me. I hope that you don't. I hope you think for yourself. But this is just data for you to consider as you walk into these conversations about with unrealistic sellers and what could possibly happen in 2 to 3 years down the line right now in real estate and how to position yourself for success. So here's one way to think about it. If interest rates didn't fall, where would the prices be? It's an interesting question. So in 1990, the principal and interest payment on $100,000 was 9.9, and the interest would be 870. Today in 2020, the principal and interest payment on a 300,000, so it's 3x. On a 2.7% rate would be 1,227 per month. Although house prices appreciated 200%, monthly principal and interest payments only increased 41%. due to the lower interest rate. Okay. So if mortgage interest rates had remained at 9.9%, house prices wouldn't have increased nearly as much from 1990 to 2020. But how much less? That's the question, right? Are you guys following me, or is this like way over your heads? Okay, I'll make sure. So the question is like, what actually drives home prices up? Well, most economists estimate that declining mortgage rates, this is the other side of it, right? 80% is the high point of this. 30 to 60%, they attribute 30 to 60% of total home price appreciation since the 1980s. So example, this is another example. I like the examples because it makes you think about, and this is what you need to explain to your sellers, right? I'll be honest with you. I live in a house in Jack's Golf and Country Club. Y'all have been here at the events. I bought my house for $840 and I got a 2.75 rate. My monthly payment is $3,200. The house down the street is almost identical house and without a pool is listed for 1.35 at a 6.8 rate with 20% down. Guess what their monthly payment is? It's $11,000.
6,500.
11,000 with 20% down. 1.35 million. Okay. Yeah. It's like crazy, right? Then it's like, so who is the buyer who can pay in Jacksonville, Florida, $11,000 a month at a mortgage payment and has 20% down of over 250 to put down?
Wow.
And not on the water. Nope.
In a country club that also has HOA and club dues.
Wow.
Are you guys getting it now?
Yes.
All right. I hear yes in the background. So this is like, it comes down to payment. Payment drives price. And the biggest factor for payment is interest rate. That's why they're saying, please bring down rates. Well, if rates come down, by the way, why would you drop rates when the stock market's at record highs? And half of the country is not having this type of manipulation in housing that we are, right? It's Florida, Texas, and Colorado, and Arizona. It is not the entire country that's having the type of market that we have right now. So a
I
buyer,
have friends that, you're right, in other places where the market is still booming, they're still selling like crazy. They don't have our inventory.
okay, exactly. So thank you. Also, demographic shifts. So we're going to go into the key variables that actually move housing and then what those variables look like for Florida. Again, I'm doing this not because it's a real estate agent conversation. This is an education about Florida housing and what is going to drive our market up and down. It's a payment problem. A buyer would be able to afford a $1,500 monthly payment could borrow 110 at 18%, right? That existed, by the way. That was like real life for people. And now it's 355 at 3%. You can see it's completely about interest rates here. Now, here's some studies, right? Because you don't want to just trust one source. You want to triangulate your information because a lot of people either lie, manipulate, exaggerate. Yes or yes. We're all salespeople here. We all do it. It's a human condition. So you want to look at this, all right? Federal Reserve said, Greenspan said that declining rates and easier credit standards explained 50% of price appreciation. So this is manipulated federal government price appreciation because the Fed is always stepping in to manipulate things up or down. And so you can see that the government really controls the housing price when you think about it that way. Harvard came out and said 35 to 40% since 1980s. Goldman Sachs, I can tell you, these are the smartest people. I interned at Goldman Sachs. I met with Jan Hatzius, who's their lead economist there. These are the smartest people on the planet. They are absolutely the vampire squid. They say a 1% drop in interest rates increases price 12 to 13%. And inverse that, right? Because we went from 3% to up to 7%. That's 4 points up, which would mean about 50% reduction in value of the property. Yes or yes? You guys following my math?
Yes.
And when I run the models myself, I come to a 31% to 39% overvaluation in the state of Florida right now for real estate assets. 31 to 39 based on current interest rates. That's from an investment perspective. He said from this period, rates fell 15 percentage points, which would predict a compound price increase exceeding 100% purely from rate declines. So the question is, I started this with this, is like, what impacts the other 40 to 70%, let's say? Let's just be generous and say it's not all about rates. Other factors, income growth. Yes, the income of the area, because that is factored into what you can afford for a payment. How's income growth been for Florida?
Maybe 5%, not crazy like this.
Amen. That's right. It sucks. Median household income for a family in Jacksonville is $65K. They can't make an $11,000 payment to buy a $1 million house. Can they buy a $400,000 house? Me and Brittany were just driving around E-Town earlier, looking at all the townhouses, which are just like stick builds that they slapped up. They're selling for $500,000. Look up what the payment is. It's like 4,500. Why would, and you can rent this same exact unit for 3,000. Why would you buy? You're paying an extra $1,500 a month to buy. So income growth, and by the way, we're also thinking like, who has that type of money per month? Like 50, if you're only making 65,000 as a median income and your payment's 4,500, how can you buy that? Who is the buyer? Right. So I want to talk about who is the buyer. And I was actually going to drop a link in the Facebook page about this. Like, who are the buyers? Like, who are you guys actually seeing transacting real estate right now? Land constraints and zoning. This is what we talk about. The Northeast has extreme land constraints in certain cities. And like, let's think about California with the zoning, right? Why are these prices holding up? And by the way, the beaches are the same way, right? Areas, there's going to be pockets of locations where there's no availability to build anymore and people still want to live there. And that's going to cause the prices to be sticky. People are like, well, I'm not seeing it at Jack's Beach, Neptune Beach, Atlantic Beach. Of course not, because they weren't able to build a ton of supply. Where you're going to see the prices go down are going to be the areas where there's just like tons of land where they're cutting down forests. If you drive down 295, you can see it on both sides. You look both ways and you're like, oh my gosh, they're building like tons of multifamily. That stuff's going to go down. They're continuing to build, right? They're just a massive supply of inventory coming on. Florida and Texas, guess what? Do not have land constraints or regulations that prevent this massive amount of building. Yes or yes? We don't. We're the Wild West down here. Population growth. Let me ask you this. What percentage of boomers, people 61 or higher, are going to die in the next decade?
35, 30, 35.
The estimate is between 40 to 80% of boomers will die. What's the population of boomers who live in Florida? What percentage?
75.
It's actually, yeah, so I love it. The data is actually showing it's about 24%. It's about 24% over 59 years old. Now, who is going to be buying these additional million, properties per year when they go into probate or they transfer for inheritance? Because I have data showing that migration to Florida has dropped 80% from the peak. So this is what I'm talking about, larger demographic shifts that could be impacting the price of real estate. This is new information to me, but we've been telling you guys, sell your rental since 2022. Sell your real estate and get into a different asset class, because asset classes, capital runs into them and capital runs out of them. Okay.
Just closed one of mine
Congratulate. That was one of the first conversations we had
last week.
Amen. Congratulations.
Gone.
So, I mean,
Yeah.
And then you have these people who are in real estate and they just like blindly believe that things will get better, right? Because they're in it, right? They have to believe it. They can't see it. And then you have the people who are like, I get it and I need to sell as fast as possible. And the people who are out of the market are like, yeah, this stuff's going to dump, because they're being the most objective about it. Okay. Now, tax incentives and policies. So there's policies that can prohibit Airbnbs. There's policies that can prohibit pad splits. There's policies that can prohibit, there's only a maximum amount of density you can put in a certain area versus multifamily versus single. That type of stuff does impact it. There's, tax incentives that you can do for purchasing properties. That stuff does drive investment in real estate as well. The last one is construction costs and material inflation, right? We had tons, like lumber prices were absolutely nuts in 21, 22, 23, and now they've come down, quite significantly. But all of these factors are factored into the price of a house, but the number one factor overwhelmingly is mortgage interest rates. That's why we're seeing such a fast correction. So we look at income growth in Florida is stagnant. There's no land constraints and they're wildly overbuilding. There's 78,000 multifamily units that have been added to Jacksonville inventory supply over the last 12 months. Okay, that's like if we have 1 million people here, it's like 1 million to 1.4. The census data is all over the place. Let's just assume it's 1 million. I mean, that's 7.8% of multifamily added to the supply. Guess how much supply is slated to come on the market in the next 12 months?
150,000.
111,000. So another 10% supply. And by the way, they're dancing on the street corners, giving 3 months free rent in these beautiful new complexes to try to find people. Why? Because they thought the population growth from the migration would continue. So you had this record level of migration that was caused by, and they thought it would continue. And so the builders continued to build, and it's just not continuing. It's going right back to normal, but the building, they just overbuilt. Now, this isn't going to be a forever thing, but it could take a decade to fill these apartments and really get it to the supply. But they're also going to be fighting these baby boomers that are passing away, right? And there's going to be more inventory coming on from that. That's an indication to me if there's like a baby boomer situation, I would be working with, probate and estate attorneys basically as a really good way to get a steady supply, right? I don't care that the market is what the market is. I want to figure out how to make money in it. Does that make sense? I'm not a victim. I'm not a victim of the market. I control my destiny. I'm looking for every freaking opportunity that in every rock that I can unturn here. I'm looking for the data so I can make the most informed decision for me and my family. What drove up prices was a ton of speculation and syndications. Obviously, you can barely see the Jacksonville name here. This is just active inventory for sale right now. The reason why inventory is not higher is why, I think I've said this in the page a couple times. Why is inventory not double what it is now?
Expired.
Expireds and canceled. So the difference between, yes, I don't know who said that, but you're correct. A plus.
Tiffany.
Tiffany, you're brilliant. You're brilliant. Expireds and canceled. Expired means it went to the end of their term. Canceled means they canceled early, right? For one reason or another. Well, that inventory is at basically 1,300, 1,400, 1,500 expired listings and canceled listings per month. Imagine if those didn't, and when those come back on, they usually come back on the market in about 30 to 90 days. 70 to 80% of them come back on the market, yeah? So we're going to see this massive influx of inventory from people tried to sell the first time and then come back on the market this time, coming into the end of the year when buyers are going to be even more scarce because we all know that seasonality is real in Florida. And once school starts in August, September, October, November time period, this is where you need to talk with your buyers, right? Where's the opportunity? Buyers, that's the time where we need to go to these new construction and negotiate like crazy on price and on rate. Yes? Okay, so the best time to be able to purchase as a buyer for new construction is October because the majority of the builders report in November. And they need to get these to show that they have pending sales before their earnings. They've been getting slaughtered. Home builders are down 20 to 25% on the stock market while the market completely ripped back, right? So the market's moving up 20%. The home builders are down 20% during that time period where, we're going to.
I got some of them, some of the new construction are texting me. They get 6% right now.
Oh, yeah. It's bad calling you, offering you lunch when they literally wanted to cut you from the industry a year ago.
Yeah, Meritage offered me 6% if I could bring a buyer. I have a couple actually I'm working with them.
I would I would do a strategy session and I would be networking with the site agents until the October timeframe. And then I would go hard with low ball offers. Now, again, that's going to drive down the entire prices of the entire community, but you're doing the best you can for your customer.
Well, that's why they're offering, the incentives at 3.99 and paying all closing costs because they don't want to drop those prices and get appraisal problems.
That's right. Yes, builders, the last thing they'll want to do is drop the price. That's right. They'll offer any other incentive. They'll literally fund an account for you for your repairs. I mean, for future repairs. They'll buy
I just thought it was interesting. I got offered a free pool in a new build.
They'll give you a Tesla. Yeah.
They'll give me whatever. They were going to cover all the closing costs and give me a free pool.
Exactly. Amen. So are we I just want to be clear. I'm hammering away. I think this is the most, by the way, no other brokerage on the planet is having this conversation because they don't even know this data. They don't care about educating on this stuff, but we need to be as extremely strategic as possible to be able to navigate this new market condition. We can't just stick our head in the sand like everybody else and pretend that everything is exactly the same from the prior years. It's not. We need to act differently and we need to adjust to what the market conditions are happening. So look, I already told you my projection is a 31 to 39% decline from peak to bottom. I don't know. That usually takes 3 to 4 years for that to happen. But, using Goldman Sachs, it's pretty much the same thing, which is pretty interesting. So our models, even though we calculate the numbers very differently, we're coming to pretty much the same conclusion on what happens with interest rates. But I will say this, next May 2026, this is political stuff, but it is important to your industry. If Powell is out, right, and someone is hand selected to replace Powell, that will reduce rates to basically zero. We could see a massive explosion in real estate. It can go either way. Either rates will come down because everybody will be terrified of what's happening because the government just keeps printing our dollar away. By the way, the value of the dollar since the beginning of the year to now is like down 20%. All right. So the government is just deciding to print everything they have. Their strategy is to outgrow the debt versus cut the spending. It's just like if you were at your house and you had a bunch of credit card debt and your credit card debt became overwhelming, right? And you can no longer make the payments. It's like out of control and it's compounding at such a fast rate that there will be a point of no return where no matter how much money you can make, you'll never catch up. No, we're not going to worry about that. Let's continue to just try to make more money and not cut at anything at all. And in fact, we're going to actually spend more money on more stuff to hope that we can outgrow it in the future. It has like a 2% probability of actually working. It's never worked. It's actually the beginning of an empire decline. It's something that I'm really passionate about because I have 3 kids, and anybody who cares about the future, this is something that you should be studying up and looking up on and realizing what is happening to the value of the dollar because of the government's basically negligent spending. And, they had a commitment to cut the spending, and then they did the exact opposite once they got into power, which is unfortunate, right? We're all hoping for some help on the budget side to make things make more sense and become more efficient. It's going the exact opposite way, the way that we're seeing it right now. So, but this is like, who cares, right? And it's political. Who cares? We don't talk about politics here. We're here about where's the opportunity. If that happens, inflation will go up. What is the best inflation hedge? There's 2.
Properties, real estate,
Real assets, commodities, properties. The best one is actually equities. So if I was a player right now, I wouldn't actually be in real estate. I would be in equities, commodities, and gold. That's where people are placing their money. That's why you might have seen gold go crazy recently. It's because people are realizing that the government is not going to take the debt situation seriously, and they're moving into other assets that are generally an inflation hedge. That's why crypto's gone crazy, right? The crypto bros are having a field day with this because they're like, we told you this was going to happen. Yes.
Yeah. What exactly do you mean by equities, and where can I take a class? Where can I learn more about them? I don't know anything about equities, but I know I need to, or investing basically.
I would say this, the future is AI for almost everything. So I would just go and buy the NASDAQ 100. Now, this is not financial advice, but this is what me and Brittany are doing. You don't like, that's the easiest thing you can do is buy the S&P 500 or the NASDAQ 100. And that's where you'd put your money, where it's going to be the best inflation hedge. Because what AI is going to do is it's going to make companies wildly profitable because they're going to lay off people in the middle management, replace it with technology, and they're going to become wildly profitable, and they're going to have massive growth at the same time.
Quickly.
Very quickly. This is all happening very quickly, right? So, but the other side of it is if the government prints out and reduces rates, and let's say mortgage rates do come down and they come down below 5%, we will see massive, like, people flooding back into real estate. But I'm not sure that Jacksonville and Florida and Texas will benefit from that necessarily because we're just so overbuilt. It's going to take time for that supply to get gobbled up. All right. So if you're doing flips, you need to be very careful. If you're doing long-term rentals, I wish you had already sold them. But you want to be as careful as humanly possible in this type of market environment so you don't get trapped. The other side of it is if you're already stuck in something, you can just wait it out, right? Took 10 years from the last time this happened. You can wait it out. If you have the ability to pay, that is an option. It's just not the best return on equity type of play, but it's an option, right? If you have the cash to ride it out, then it's not a doomsday scenario. But let's talk about, can you guys see my screen, Florida migration?
Yeah.
I can pop off whenever you guys want. I can stay on. I've got another call I got to get ready for in about 10 minutes. I can stay on another 10 minutes if that works for you guys. All right. Florida migration. Okay, here's the issue. We don't have natural population growth. Like, more people are dying here. So you have to have migration to the state. Yes. There's more people dying here than are being born. So the only way the state grows is in population growth is one of the number one factors behind mortgage interest rates decreasing that would cause, prices to go. Older people are the ones who are relocating, right? People who have already made their money are usually the ones who are relocating. And here's the chart that's like the most important, right? In 2020, we had migration was like 0 because everybody was scared. Nobody was moving anywhere. Nothing was happening. Then we had this massive spike. And this is where I think the builders thought these numbers would continue for migration. And rich people would continue to move here, yeah? And then what they didn't realize is once they raised rates, boom, 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 all the way down, 80% drop, back down to the worst, we've been for a very long time since the '08 recession of people relocating here. I'm guessing it's actually lower this year. I'm getting reports from agents with people who are moving back to where they came from because of return to office, because of layoffs. They moved here to work virtually from wherever they came from. They're getting laid off and they can't find anything that pays what they earned previously. And they will not sacrifice their lifestyle. Most people just won't do anything to sacrifice their lifestyle to be able to have a better future, right? It's all instant gratification. They just won't do it. So they'll move back to where they came from to keep up their lifestyle. So I expect this to actually 2025, it'll be really interesting, the data that comes out here. But it's a huge problem. 80% decrease is really where the builders did their miscalculus.
John, why do you think that it started to go down in 2017 and 2018?
No idea.
Okay.
No idea. I think there's a lot of people who are experts at this stuff. I'm just studying what the last few years that I've been involved with this, but it's a great question. There's a lot of different factors that impact migration. The reason why Brittany and I moved to Jacksonville, Florida is it came up as number 2 as one of the most affordable places to live on the East Coast. And this was in 2014. And, you could rent a place for $1,000 a month here. It's like really nice. In DC, it costs like $3,000 for the same place. Now it's like $3,000 to rent a place in Jacksonville, and it's no longer affordable. Why would you move here? Why? Why would you live here? It's like better to live in my mom's basement in DC. Like it sucked. But like it just doesn't, the numbers don't make any sense anymore unless you're already locked in. And that's when we talk about like, why would people migrate to Florida in today's market environment? Prices have to come down. If prices come down, then it becomes affordable again, then it makes sense. This is where people are coming from. So this is 5-year net migration to Florida by state. So New York, New Jersey, Chicago, Illinois, Pennsylvania, California, right? Exactly what you would expect, right? They're coming from the north to the south. And then this is where they go. They go to North Carolina, like Raleigh. They go to Texas, Georgia, Tennessee, Alabama. So other, kind of Sunbelt states is where they're leaving to. But I think the migration is going to be kind of interesting. I think over the next few years, you're going to see people moving back to the areas where they moved here from. Has anybody experienced that yet with a customer where they're going back to where they came from? No, I'm experiencing it. I'm having conversations with maybe the agents on this call. We got 256 agents of the company right now. So this is why people moved here, right? Low cost of living, no personal income tax. And this is from Florida Tax Watch. Now that Floridians are leaving the state because of increased cost of living, rising property taxes, rising automobile insurance, right? Like insurance is crazy, rising housing costs, and more frequent and severe weather events.
Hey, John, I got a question on that.
Sure.
You hear a lot of these, and it's mostly on Facebook or whatever, about dropping property taxes for your primary residence in Florida. What do you think the chances of that are?
So we actually had a great conversation. It's a great question. So we had a conversation with the St. John's property tax appraiser, and I asked him that question. I said, what's the reality of this? He said it's impossible for it to ever happen because the way that the government is set up is that you have local government, and then you have state government, and then you have federal government. Well, if you take away local county revenue sources and you give it to Tallahassee, which is out of the state, then each county would have to go beg each year to get allocations to fund their county. How do they do that? Is it by population? How does the state know better than what the local people who are running the local government at allocating the resources for what they need personally? So he said it's like a great PR stunt. He said, DeSantis is what it is, but he said it's completely a stunt. And then he said, I did research on this and actually did a YouTube video on it. For them to raise property tax, they would have to increase the sales tax from 6.5% to 12% to make up that funding. Otherwise, we would just have to cut all the resources that we get. Schools, police officers, hospitals, all that kind of stuff that is important. So you have to fund it somehow. And the new model that DeSantis is proposing is not practical and does not make any sense. It's a PR stunt for him to get attention because people hate property taxes. There are conversations about doing rebates for people who are older, over, the boomers. Like the boomers are basically giving themselves incentives to like not have to pay taxes and stuff like that. But here's one other thing, in this big, beautiful bill, they are taking away Medicare benefits to a lot of people who are on Medicare. How many people in Florida have used Medicare?
Oh, ton.
2 million. We would be the most impacted by this big, beautiful bill that's coming through, adding $5 trillion to the debt limit. So you're going to see poor people here in Florida struggle even more because they're not going to have the Medicare benefits that they thought they would have. And that's going to have a huge impact on Florida specifically. We'd be the number one impacted by that when that passes, if it passes. It looks like it's going to pass. So, so there's things that are going on at the high levels that are going to impact Florida specifically. So there's not a piece of information out there that I can find that would be like positive on the Florida housing market in the near future. When it comes, I'll let you know, right? The only positive is that prices are coming down and it's going to become more affordable, right? Because they overbuilt and the builders will have to eventually capitulate to be able to move things forward. But that's all I have for today. I have like tons of information that I can share with you. This is just what I wanted to share with you now. I'm happy to answer any questions about the data. If you have questions of how you are, how you want to play this market going into the end of the year and going into next busy season, I love talking about that type of stuff. So whatever would be helpful for you. Yeah.
I have a question. It might be, I don't know how many people this will apply to, but where do you think the opportunity is for investors who are flipping? Because I'm seeing prices come down all over, and I feel like sometimes I'm missing or leaving a lot of money on the table because I'm passing on so many deals that otherwise would probably make sense. But I'm scared to touch anything because I don't want to get stuck with a bad flip. So how do you capitalize?
I think that's smart, actually. So, I also do lending momentum agents. So if you want to do a fix and flip, I can give you a private loan to go do a fix and flip. The agents I funded too in the last 2 weeks. Why? Because they're finding deals that are actually deals. Previously, you would do a deal to make $30,000, $40,000 on a spread. Well, that can evaporate in 2 months in this type of market. So you have to find something that's like tremendous amount of equity that's actually a deal. You actually have to work hard to find the golden nuggets that are out there. They're out there. And by the way, by the end of the year, more sellers will start capitulating on their price, create a bigger opportunity. So I think, for fix and flips, it's going to be a tremendous opportunity, probably November, December, January to be able to purchase. Would I purchase now? Only if it's a rock solid deal. Like the ones that I'm funding, there's $100,000 worth of equity. We're no longer talking about $20,000, $30,000 flips in this market environment anymore. There's a good chance you could lose 20, 30 on those if they don't sell, and then you have to hold until next busy season.
Okay. Yeah, I think my plan
Foreclosures are
now
going to
is
be a thing
stockpile
too.
cash and then wait until the market drops and then just jump on the opportunity. But I get scared that I'm leaving money on the table. But I guess it's better than losing.
I mean, it just, you have to decide for yourself what type of flipper you want to be and what margins you're comfortable with. All I would do is I would price in a margin of error.
Okay.
It's a great question. What do you do if you're a flipper? All I can tell you is the smartest people aren't flipping anymore.
Yeah.
Right? He had like 30, 40 people working for him. It was like Wolf of Wall Street when you walk into his office is awesome with cold callers. All gone. Now it's just him doing local deals, trying to find deep value discounts, make it happen. Stuff that's on fire, literally stuff that's on fire, no one else will touch. He's doing those type of deals that have tremendous amount of equity opportunity in them. Right? They had 40-person operation. Where are they? They're gone. The smartest people got their money and they jumped out in 2023 when the numbers no longer made any sense anymore. That's a huge opportunity for the people who are remaining, but it's no longer going to be, hey, I'm going to spend $40,000, $50,000 on marketing and have a team go out there and execute this anymore. I'm going to go really small and I'm going to save my cash, and it's going to be all a networking game and a ground game versus an air game, which is similar to how agents need to, if you're new into the industry and a real estate agent, you need to do a ground game. The air game doesn't work in a down market as well. It works, just not as well. It's a great question. Danny, you had a question?
No, I was just stating that, you said probably around November, December. I expect that's when we're going to start seeing more of the foreclosures too, with all the shutdowns on the FHA and VA programs that were holding them up. So I think there's going to be some opportunity there as well.
Yes.
And then being the slow season, it's also going to be even more of a buyer's market, I believe, because there's not going to be a whole lot of buyers. So sellers are going to be desperate.
It's going to be desperate. So if you have a listing now, you need to tell them this, right? This is not a normal year for real estate. This is actually the fastest change we've ever had. People who are back here in 2008 are like, went through 2008 are realizing like this is changing way faster than 08 in Florida specifically. Not the whole country, but in Florida, they're like, it's just moving so much faster than anybody could have anticipated in terms of price. Even the rental that I had a rental I sold in 2023 for like $435. Right before that, they were selling for like $460. Now they're trading for $380, $360. I mean, and it's in a area with no new construction around. Right? I mean, this is prime time. I think sellers are totally unrealistic. The one thing you could show your seller to get them to move is like, could they buy the same house they have right now at today's rate? Show them the payment. Ask them who they think the buyer is who can afford a $5, $6, $7, $8,000 payment. This is why it's not selling. You must reduce your price if you actually want to move. We also have a property management division. So if they're unrealistic on that, they want to keep their rate, they want to keep their payment, they need to flip it. The other way for them to move is to flip it to property management, which, by the way, rents are down 20% in some areas. We use on who's the owner of Nest Finders, has over 1,000 units. And he was saying, yeah, like rents are coming down 10 to 20% depending on the area because the multifamily overbuild, and that's impacting the single family. And people aren't having kids anymore, so they're living in condos. Okay, the median first-time home buyer is 38 years old, so they're delaying because they just don't have the income to be able. They don't think they can afford to have a kid and lifestyle to have a kid anymore. It sucks. What else you guys got? Is that it?
Yeah, appreciate it.
Okay. Well, this is information. So another question, one more. This is information no one else is really talking about. So I'm really happy that we're talking about it here. I'm looking through the chats here. Are they calling for 1% rates or to cut rates to 1%? No, they're talking about cutting rates, the Fed funds rate to 1%. Daniel, is it fair to assume that a buyer for a home in that neighborhood or just above 800K price range cater more to cash buyers? No, there's not cash buyers. It's everybody here is poor. So like what you notice like about my neighbors is that it sucks to say this, don't repeat this to anybody, but you talk to them about their financials. They're all just like buying like nice cars and nice houses to impress each other, but nobody actually has any real money. They're all stuck on like high payments and loaded up with debt. All right. I don't know any cash buyers in my neighborhood. And
I'm actually working with one now.
Cash buyer?
Yeah.
Hold on to those suckers, man. Tim,
No, I don't want to hold on to them. We're making a decision on a property today.
you should be able to negotiate like crazy with cash. So where's the opportunity for a new agent, Greg? I mean, we talked about it. Look, you have to hustle. Like this is a different type of market. This is a market where, you used to be able to contact 20 people a day and have 20 real estate conversations a day, and you would be able to sell, 36 homes in a year. Now the number is 42. 42 real estate conversations per day. I don't care how you have them. If it's cold calling, door knocking, open houses, whatever lead strategy works with your personality profile, you got to work, more than 100% harder, right? It's like 102% harder than you worked before in the boom years. But the boom years were totally artificial, and it was caused by the Federal Reserve. It wasn't real. Just so we all know, like that wasn't a real market. It was just completely Fed induced. Now we're going back to reality. And it's going to require you to do the ground game again and no longer the air game. And the problem is that a lot of agents that came in from 2020 to 2023 that came into the market, spoiled, entitled. These are the words that come up: spoiled, entitled. Because they would just walk around the street and everybody was motivated to buy. Right. So and now they're changing into a market that's changing the fastest into, a buyer's market, from the hottest seller's market ever to a buyer's market. And they're like, I don't know what to do. It's like now you have to actually learn how to be a professional real estate agent, right? Before it was just like madness. So look, what you're going to do is you're going to lead generate like crazy. You're going to have 42, find your unique competitive advantage to have 42 conversations a day. There's a bunch of different ways that you can do that. There's 42 different ways that you can lead generate. Okay. You can do marketing, prospecting, or a mix of both. We have a bunch of classes on that. We're going to have master classes at the end of this year, an 8-course thing in person at Jack's Golf and Country. Most of them will be in person. Some of them will be recorded, but we'll be going over all of that. Thoughts on moving to a new market up north for fix and flips? It's a personal decision for you. Each market has their individual challenges, right? So the markets up north, it's much harder to find deals, and there's not a lot of seller capitulation. So it takes time to build that type of network. In Florida, we're going to have a ton of capitulation. I actually think that the opportunity for fix and flippers will be here in about 2 years, and it'll be the biggest opportunity of a lifetime. That's why I want you all to save money, make as much profit as possible, and stack it away. We're doing it. And then once we have you can get a loan from us, like if you don't have the cash yourself, but we want you all to use your own cash because it's expensive to borrow from us. It's expensive. So I would stack cash, cut expenses as low as possible in personal and in business. You need to kind of wait out the storm while hustling, fighting through it. Like Brittany says, be the buffalo, right? Charge the storm, go right through it. The fastest way to get through the storm is to get realistic on your day-to-day habits. Most agents don't actually know what it looks like to be successful in real estate. I'm talking about when we were selling real estate back in 2016, we were making 500 calls before noon. Then we were door knocking from 12 to 2 and hit 200 doors. And then in the afternoon, we'd be going on 2 to 3 appointments a day. And we did it every single day. Weekends, 4 open houses minimum. We hustled. We did everything we possibly could because I was tired of being broke. I was broke and in debt. It was horrible. And any agent here has the same opportunity. I think the amount of education and support that we have here versus what I had, which is virtually nothing, you should be able to get there so much faster with the mindset and with the resources that we have. And you can rip off and duplicate everything that we used. It still works today, obviously. I mean, we're updating it all the time, but it's going to come down to the hustle. And there's no way around the hard work. There's no fast track to success in any industry. It was just timing for those people that came in 2020, 2023 because the Fed, reduced the rates. With that, I'll let you guys go. Love you guys. If you need anything, reach out to me or Brittany. We're here for you. This is a light week because it's July 4th. So happy July 4th, and we'll get back to work next week. If you need anything in the meantime, give us a heads up. Thanks so much, guys.